Have you ever wondered why people are calling Bitcoin the gold of the digital age? Or how it turned early adopters into millionaires, even billionaires? Well, in today's video, we're diving deep into the world of Bitcoin, the revolutionary cryptocurrency that's reshaping how we think about money, wealth, and investing. Whether you're new to crypto or already trading, stick around because I'm breaking down why Bitcoin matters, how it can make you rich, and the best strategies to maximize your investment while avoiding common pitfalls. Trust me, by the end of this video, you'll have a solid roadmap for navigating the exciting world of cryptocurrency. So, if you're ready to take control of your financial future and learn the secrets behind Bitcoin's massive potential, hit that like button and let's get started. Bitcoin, the first cryptocurrency, was introduced in 2009 by the pseudonymous creator Satoshi Nakamoto. It was designed as a decentralized digital currency to bypass the need for intermediaries like banks. The underlying blockchain technology revolutionized finance by offering a secure, transparent, and immutable ledger of transactions. Since Bitcoin's inception, thousands of other cryptocurrencies, such as Ethereum, Cardano, and Solana, have emerged, creating an entirely new asset class. Cryptocurrencies are no longer just a niche interest, but a global phenomenon influencing industries like finance, technology, and even art, for example, NFTs. Key benefits of investing in Bitcoin. A. Decentralization and security. Bitcoin operates on a peer-to-peer network without a central authority. This decentralization makes it more secure and less vulnerable to manipulation or censorship by governments or financial institutions. B. Digital scarcity. Unlike fiat currencies, which can be printed indefinitely by governments, Bitcoin has a hard cap of 21 million coins. This fixed supply creates digital scarcity, making Bitcoin comparable to gold in terms of value preservation. As demand increases, this scarcity drives up its price. C. Borderless transactions. Bitcoin enables fast, low-cost transactions across borders. Traditional remittance services often charge high fees and take days to process payments. Bitcoin eliminates these inefficiencies, making it a game changer for global commerce. D. Growing institutional adoption. Institutional investors and major corporations are increasingly investing in Bitcoin. Companies like MicroStrategy, Tesla, and Square have added Bitcoin to their balance sheets, signaling confidence in its long-term potential. Additionally, Bitcoin ETFs, exchange-traded funds, have made it easier for traditional investors to gain exposure to this asset. Bitcoin as a hedge against inflation. Fiat currencies lose purchasing power over time due to inflation, caused by excessive money printing by central banks. For instance, during the COVID-19 pandemic, governments injected trillions of dollars into the global economy, leading to inflation spikes. Bitcoin, with its limited supply and predictable issuance rate, is often referred to as digital gold. Like gold, it serves as a hedge against inflation. Unlike gold, Bitcoin is easily divisible, portable, and transferable, making it a more practical store of value in the digital age. Historical performance and wealth creation. Bitcoin has consistently been one of the best-performing assets since its inception. Its price trajectory demonstrates its wealth-generating potential. In 2010, Bitcoin was worth less than 1 cent. By 2017, it reached nearly $20,000. In November 2021, it hit an all-time high of over $69,000. Investors who believed in Bitcoin early on have reaped extraordinary rewards. For example, a $1,000 investment in Bitcoin in 2010 could be worth millions today. While past performance doesn't guarantee future results, Bitcoin's long-term growth trend makes it a compelling investment. Expanding use cases of Bitcoin. Bitcoin's use cases have expanded far beyond being a simple digital currency. Store of value. Many investors hold Bitcoin as a hedge against economic uncertainty. Means of payment. Bitcoin is increasingly accepted by merchants worldwide, including Microsoft, PayPal, and Overstock. Decentralized finance. DeFi. Bitcoin can be integrated into DeFi platforms for lending, borrowing, and earning yields. Remittances. Bitcoin is widely used for cross-border remittances, especially in regions with unstable local currencies. How Bitcoin can make you wealthy. Capital appreciation. Bitcoin's price volatility, while risky, creates opportunities for significant capital gains. Long-term holders or hodlers who bought Bitcoin during market dips have often seen substantial returns during bull markets. For example, if you purchased Bitcoin during the 2018 bear market for around $3,000 per coin, your investment would have grown more than 20x by 2021. Diversification. Bitcoin is an uncorrelated asset, meaning its price movements are often independent of traditional financial markets. Including Bitcoin in your investment portfolio can enhance diversification and improve the overall risk-adjusted returns. Passive income opportunities. Beyond price appreciation, Bitcoin offers passive income opportunities. Lending. Platforms like BlockFi and Celsius allow you to lend Bitcoin and earn interest. Yield farming. While not directly related to Bitcoin, other cryptocurrencies in the DeFi space can generate high yields through staking or liquidity provision. Early adoption advantage. Despite its growing popularity, Bitcoin adoption is still in its early stages. As more people and institutions adopt Bitcoin, its demand and value are likely to increase, benefiting early investors. Strategies for investing in Bitcoin and cryptocurrencies. 1. Education is key. Before investing, take time to understand the fundamentals of Bitcoin and the cryptocurrency market. Learn about blockchain technology and how it powers Bitcoin. Factors influencing Bitcoin's price, for example, supply-demand dynamics, market sentiment, regulations, the risks involved, including volatility, security, and scams. 2. Dollar cost averaging. DCA. DCA is a proven strategy for mitigating market volatility. By investing a fixed amount at regular intervals, for example, weekly or monthly, you avoid trying to time the market and reduce the impact of price fluctuations. Example of DCA. Invest $200 in Bitcoin every month for 12 months. When prices are low, you accumulate more Bitcoin. When prices are high, you buy less. Over time, this averages out the cost of your investment. 3. Diversify your investments. While Bitcoin is the most established cryptocurrency, diversification is crucial. Consider allocating a portion of your portfolio to Ethereum ETH, the leading smart contract platform; altcoins, smaller cryptocurrencies with high growth potential, such as Solana, Cardano, or Polygon; stablecoins, cryptocurrencies pegged to fiat currencies, providing stability during market downturns. 4. Invest only what you can afford to lose. The cryptocurrency market is highly speculative and volatile. Never invest money you can't afford to lose. A good rule of thumb is to allocate only a small percentage of your portfolio, for example, 5 to 10%, to cryptocurrencies. 5. Secure your investments. Security is paramount in the crypto world. Follow these best practices. Use hardware wallets. Store your Bitcoin offline in a hardware wallet like Ledger or Trezor. Enable two-factor authentication to FA. Add an extra layer of security to your exchange accounts. Avoid sharing private keys. Never share your private keys with anyone. 6. Stay informed. The cryptocurrency market evolves rapidly. Stay updated on market trends and technical developments, regulatory changes in your country, news about major partnerships, adoptions, or security breaches. Follow reputable sources like CoinDesk, Cointelegraph, or influential figures like Andreas Antonopoulos. Risks and considerations. Market volatility. Cryptocurrency prices are notoriously volatile. While this creates opportunities for gains, it also increases the risk of losses. For instance, Bitcoin's price dropped from $69,000 in November 2021 to around $20,000 by mid-2022 before recovering. Regulatory risks. Governments worldwide are still figuring out how to regulate cryptocurrencies. Changes in regulation, such as bans or taxation, can impact Bitcoin's price and adoption. Security threats. The decentralized nature of cryptocurrencies makes them attractive targets for hackers. Protect your assets by using secure wallets and avoiding phishing scams. Lack of consumer protections. Unlike traditional banks, there are no consumer protection mechanisms for cryptocurrencies. If your Bitcoin is lost or stolen, it's nearly impossible to recover. Practical steps to start investing in Bitcoin. Choose a reputable exchange. Select a trusted cryptocurrency exchange like Coinbase, Binance, Kraken, Gemini. These platforms allow you to buy, sell, and store Bitcoin securely. Set up a wallet. After purchasing Bitcoin, transfer it to a secure wallet. You can choose hot wallets, online wallets accessible via apps or websites, suitable for small amounts. Cold wallets, offline hardware wallets, ideal for long-term storage. Make your first investment. Start small and gradually increase your exposure as you gain confidence and understanding. Monitor your investment, but avoid overreacting to short-term price swings. Future trends and predictions. Mainstream adoption. Bitcoin is increasingly being adopted by financial institutions, corporations, and even governments. This trend is likely to continue, driving up demand and price. Technological advancements. Upgrades to the Bitcoin network, such as the Lightning Network, are improving its scalability and transaction speed, making it more practical for everyday use. Integration with traditional finance. The introduction of Bitcoin ETFs, institutional investment vehicles, and custodial services is bridging the gap between cryptocurrencies and traditional finance. Long-term price predictions. While short-term price movements are unpredictable, many analysts believe Bitcoin could reach six-figure valuations in the coming years as adoption grows and supply diminishes. Bitcoin, a financial revolution. A brief history of Bitcoin. Bitcoin emerged as a response to the 2008 global financial crisis. In the crisis's wake, trust in traditional financial systems eroded due to the collapse of major banks and the questionable practices of financial institutions. Satoshi Nakamoto's Bitcoin White Paper, published in 2008, proposed a peer-to-peer digital currency that eliminates the need for intermediaries. The first Bitcoin transaction occurred in 2009 when Satoshi Nakamoto sent 10 BTC to Alfini, a software developer. In 2010, Bitcoin began to gain monetary value. One famous story involves a programmer, Laszlo Hanyecz, who bought two pizzas for 10,000 BTC, an amount now worth hundreds of millions of dollars. From its humble beginnings, Bitcoin has grown into a global phenomenon, evolving from an experimental currency to a robust store of value and investment vehicle. The unique features of Bitcoin. Decentralization. Bitcoin operates on a decentralized network powered by blockchain technology. Transactions are verified by thousands of independent computers nodes worldwide, ensuring no single entity controls the system. Immutability and security. Once a Bitcoin transaction is recorded on the blockchain, it cannot be altered or deleted. This makes Bitcoin highly secure and resistant to fraud. Transparency. Bitcoin's blockchain is public, allowing anyone to view transaction details without compromising user identities. This transparency builds trust and accountability in the system. Accessibility. Bitcoin is accessible to anyone with an internet connection. In regions with unstable currencies or limited banking infrastructure, Bitcoin offers an alternative means of storing and transferring wealth. Real-life use cases of Bitcoin. Bitcoin's applications extend far beyond trading or speculation. Here are some prominent use cases. Cross-border payments. Traditional international payments involve high fees, currency conversion charges, and long processing times. Bitcoin simplifies this process, enabling near-instant, low-cost transactions across borders. Financial inclusion. In developing countries, where millions lack access to traditional banking systems, Bitcoin provides a lifeline. It allows individuals to store value, receive payments, and participate in the global economy without needing a bank account. Remittances. Workers sending money to their families in other countries often face exorbitant fees through traditional services like Western Union. Bitcoin remittances reduce costs and increase speed, benefiting both senders and recipients. Hedge against political instability. In countries experiencing hyperinflation, for example, Venezuela, Zimbabwe, Bitcoin serves as a hedge against currency devaluation. Citizens can store their wealth in Bitcoin, protecting it from eroding in value. Bitcoin versus traditional investments. Bitcoin versus stocks. Volatility. Both Bitcoin and stocks experience volatility, but Bitcoin's price swings are generally more pronounced. Returns. Bitcoin's historical returns have outpaced most traditional stocks, though it carries higher risks. Independence. While stocks depend on company performance, Bitcoin's value is driven by network demand and adoption. Bitcoin versus gold. Portability. Bitcoin is easier to store, transfer, and divide compared to gold. Supply. Gold supply increases gradually through mining, while Bitcoin's supply is capped at 21 million coins. Liquidity. Bitcoin markets operate 24/7, unlike gold markets, which are limited to trading hours. Bitcoin versus real estate. Liquidity. Bitcoin is highly liquid, while real estate transactions can take weeks or months. Accessibility. Investing in Bitcoin requires far less capital compared to real estate. Maintenance. Bitcoin doesn't require ongoing expenses like property maintenance or taxes. Advanced strategies for investing in Bitcoin. Timing the market. While it's difficult to predict Bitcoin's short-term price movements, historical patterns often repeat in cycles. Bull markets. Bitcoin's price rises sharply due to increased demand, often fueled by media attention, or having events when Bitcoin mining rewards are cut in half every 4 years. Bear markets. Prices correct and stabilize after bull markets. These periods offer excellent buying opportunities. Using technical analysis. Technical analysis involves studying past price charts and market trends to predict future movements. Key indicators include moving averages to identify price trends, RSI Relative Strength Index to determine if Bitcoin is overbought or oversold, Fibonacci retracements to predict potential support or resistance levels. Portfolio allocation. A well-balanced portfolio might include 60% Bitcoin, the most stable cryptocurrency, 30% Ethereum for exposure to smart contracts and decentralized applications, 10% altcoins, smaller, riskier projects with high growth potential. Setting stop losses. Set a predetermined price at which you'll sell to limit losses. For example, if you buy Bitcoin at $30,000, you might set a stop loss at $27,000 to avoid losing more than 10%. Bitcoin's role in decentralized finance DeFi. Decentralized finance DeFi is a growing sector that uses blockchain technology to replicate traditional financial services without intermediaries. Bitcoin can be integrated into DeFi systems for purposes like lending and borrowing, earn interest by lending your Bitcoin, or take out loans by using it as collateral. Yield farming, earn rewards by providing liquidity to DeFi platforms. Future trends in Bitcoin. Increased institutional adoption. As Bitcoin matures, more institutional investors, banks, and corporations are incorporating it into their portfolios. This legitimizes Bitcoin as an asset and increases demand. Regulatory clarity. Governments worldwide are working to establish clear regulatory frameworks for cryptocurrencies. While regulations may initially cause price volatility, they'll likely foster long-term growth by legitimizing the industry. Bitcoin ETFs. Bitcoin Exchange-Traded Funds ETFs allow investors to gain exposure to Bitcoin without directly owning it. As more ETFs are approved globally, Bitcoin's accessibility will increase, attracting new investors. Environmental sustainability. Bitcoin mining has faced criticism for its environmental impact. However, the industry is shifting toward renewable energy sources and exploring innovative solutions to reduce its carbon footprint. Real-life success stories. Numerous individuals and businesses have achieved financial success through Bitcoin. Here are two notable examples. Early Bitcoin adopters. Eric Finman, who invested $1,000 in Bitcoin at age 12 in 2011, became a millionaire by 18. Winklevoss twins, famous for their legal battle with Mark Zuckerberg, invested heavily in Bitcoin in 2012 and are now billionaires. Businesses accepting Bitcoin. Businesses that embraced Bitcoin early, like Overstock and Microsoft, have benefited from increased visibility and additional revenue streams. Risks in greater detail. While Bitcoin presents exciting opportunities, it's crucial to understand its risks. Volatility. Bitcoin's price can rise or fall by thousands of dollars within hours. While this creates opportunities for profit, it also increases the risk of losses. Security risks. Although blockchain technology is secure, individual wallets and exchanges can be hacked. Always use trusted platforms and secure wallets. Scams and fraud. Be cautious of phishing attacks, scammers impersonating legitimate services, Ponzi schemes, promising guaranteed high returns, fake wallets, malicious software designed to steal your funds. Regulatory uncertainty. Governments may impose restrictions or bans on cryptocurrencies. Stay informed about regulations in your country. How to get started with Bitcoin. Choose an exchange. Start by creating an account on a reputable cryptocurrency exchange like Coinbase, Binance, or Kraken. Complete identity verification as required by the platform. Fund your account. Deposit fiat currency, for example, USD, EUR, into your exchange account using bank transfers or credit cards. Buy Bitcoin. Purchase Bitcoin in small amounts to get familiar with the process. You can also set recurring purchases for dollar cost averaging. Secure your investment. Transfer your Bitcoin to a secure wallet, such as a hardware wallet, to minimize the risk of theft. Conclusion: a digital frontier. Bitcoin represents a paradigm shift in the financial world, offering an alternative to traditional systems plagued by inefficiencies and centralization. It's more than just an investment, it's a movement toward financial independence, decentralization, and global accessibility. While investing in Bitcoin carries risks, a well-informed and disciplined approach can help you navigate the volatility and seize opportunities. As Bitcoin continues to evolve, its potential for wealth creation, financial empowerment, and technological innovation remains unparalleled. Now is the time to explore this digital frontier and position yourself for the future of finance.